So, okay, a few things what I wanted to tell before we start the revision session. I'm good, Ismail. Thanks for asking. So, a few things I wanted to tell before I start this, revision session is one is whatever happens in the new syllabus will not impact your current foundation attempt. It will take some time to come up. And whatever happens in inter will be better for you because they have removed some content from inter. They have brought in definitely some part of final into inter, but this is not the time where you should be worrying about the syllabus change. Okay, that is one thing what I wanted to tell you. For now, your focus is examination. You have to write your examination. You have to crack your examination. Then as and when they notify the new syllabus, how they will, there will be a transition and all of that, then we'll take care at that point of time. Right now, your focus should be on the upcoming examination. As I told in earlier videos also, I have seen two changes, one as a student, one as a teacher, from the earlier syllabus to the new syllabus. Nothing to worry, it will be a smooth process. It has happened for your good. Your focus should be fully on your examination, right? Now, coming to our discussion on revision for one of the most tricky topic, I should say, in CA Foundation. This is with respect to consignment. Now, here, before I start the revision of consignment accounting, I want, whoever has some specific topic which they want me to address, or if they have any specific area which they find it, it's difficult or complex, you can, type it out in the chat box and ensure that I cover and clear each one of your doubts in those areas. So wherever you're finding difficulty in consignment, please type it out in the chat box and I'll take up your questions from there and then I'll cover them. Then we'll see a few illustrations where there has been some complexities, where there could be some confusions, and we'll clarify those as well. So quickly, in a couple of minutes, if you can just type it out, then or you can even speak it out, then we can do it. Those of you who are on YouTube, if you want to join the Zoom session, I've just posted the link. You can click on that and join the Zoom session. Yeah. Commission, okay. Others, see, this is an opportunity for you to get rid of the fears of consignment, and I will demonstrate it to you how you can score 7 to 8 marks easily in any consignment problem. Normal and abnormal loss, okay. Company accounts we will take it up in the maybe in the next session. That time we can cover it. Today it is specifically for consignment accounting. Only 2 areas of concern. Others? Invoice price problem. Okay. Let me share my screen as well. Closing stock valuation, invoice price, stock reserve. Stock reserve is related to invoice price. Definitely, yes. Okay. Let me see any more aspects. Are you able to see my screen?
Yes, yes.
Okay, good. So let's start up. Okay. Yeah. So I got a sense of, and I was expecting these kind of questions from you guys. So let's start off. Okay. Now, when it comes to consignment, most of the time from the point of view of the consignee and not the consignor, right? Most of the times questions are asked based on consignee and not the consigner. Just give me a moment. Let me set things up. Yeah. Okay. So I have to use, 3 gadgets, one to write, one to, control Zoom, and one to see what is happening on YouTube. So that's how the session goes. 3 gadgets, and that's the entire classroom actually.
Only tell your one.
Sorry. Okay. So we have the consignee and the consignor. If you are clear with consignee, consigner more or less is clear and easier for you, and there will not be any complication. Now, just to give you a broad, I know all of you know this, but still, consigner sends what? Consigner sends. Guys, please mute yourself. No. The very purpose of having the meeting on Zoom was to allow you to speak when required. So I request every one of you to please check and mute yourself and only unmute when you are talking. Okay. Yeah. Right. Consigner sends goods. Consignee sells these goods to the customers. Now, consignee sells goods to the customers. Now, these sales, whatever are the sales, these sales should be considered as sales of consignor or the consignee.
Consignor.
The sales will be sales of the consignor. What is consignee interested in?
Commission.
Consignee is interested in commission. Okay. And so what the consignor does is, consignor sends some goods to the consignee. Consignee sells the goods to the customer on behalf of the consignor, and the consignee gets something called a commission. Now, I think mostly you will be asked, books of consignor. That is the account of consignee and the consignment account. I did, I don't know why I was in a flow and I just told it's consignee that's more important. Now, when you look at the books of consignor, what consignor is interested is to determine what is the profit on consignment. Okay. So, if I was the consignor and if I am sending goods to the consignee, assuming you are the consignee, my interest is how much profit I have made on the goods that I have consigned to you, and you have sold it to the subsequent customers. Now, to arrive at this profit, we prepare something called a consignment account. Now, this account is a very, very simple account, and this account is like your trading and profit and loss account. This account is like your trading and profit or loss account, where you debit all the expenses and you credit the income. You do the same thing in the P&L and trading accounts?
Yes, sir.
Correct or not? Yes or no?
Yes.
Yes, sir.
Okay. So here also you will follow the same logic. What is the logic? Debit all the expenses, credit all the income. Now, when I say expenses, here we are not purchasing anything specifically, but we will be sending goods from our inventory. So the goods that we are sending out on, from our inventory is like a purchase. It's not a purchase, but for the consignment books, or if you treat the consignment part separately, you think as if it is a purchase, or it is a expense where you are sending goods on consignment, because there will be cost of goods sold. This cost of goods sold is nothing but opening stock plus purchases minus closing stock. Now we will not have purchases here. This will be replaced with your goods sent on consignment. So when you come to expenses side, first thing that comes is to goods sent on consignment. Okay. Then if at all there are any, closing stock, like you credit closing stock in your trading account, here also you will credit sales. Sales is an income item, so you will credit sales. Okay. Then in any trading or profit and loss account, we'll have expenses. Now, you will debit all the expenses in the consignment account. But now here a thing that you have to keep in mind is these expenses may be done or made by the consignor or the consignee. There could be expenses which are incurred by the consignor or by the consignee. Now, if the consignor incurs an expense, what will be the accounting entry?
Cash or bank should be debited.
Sorry?
Sir, we should debit to cash or bank, sir.
Right. So, see, generally your entry will be what? Expenses to bank. Now, because the consignment account itself acts as an expense account for you or trading P&L account for you, you will say consignment to bank. So, for all the consignor expenses, you will have to bank, or if it is on credit, to payable. Any doubt so far?
No, sir.
Then, if consignee incurs the expense, the consignor has to reimburse those expenses to the consignee. The consignor has to reimburse those expenses to the consignee. So, what will you say? You will say to consignee. Why to consignee? Because it is payable to the consignee. Okay. So, you may have opening stock also, but generally opening stock kind of questions are not tested. If you have, you can include that as well. You will have to goods sent on consignment. You will have expenses of the consignor and the consignee. Then you will have sales. Then you will have closing stock. What other items can you see or can you get in the consignment account? Can anyone tell me?
Normal loss.
Sorry, losses. Okay, loss would be there. We'll deal losses separately. Apart from losses.
Loading.
Commission.
Sorry?
Commission.
Commission. So you have to pay commission. Whom will you pay commission to? To the consignee. So for commission also you will say to consignee. Are we clear?
Yes, sir.
This is the broad structure of a consignment account. Now in the exam, even if you are not able to value, let us say normal loss or abnormal loss, or if you get some kind of confusion there, sales will be straightforward. Goods sent on consignment will be straightforward. All these expenses will be straightforward, and you will be able to score some marks out of this. So the reason why I'm telling you again here is this is in the form of trading P&L account. Like I told you in other cases also, don't get scared because of one tricky adjustment or one thing that you're not able to understand. Now, where students get confusion or where institutes try to, trick the student is obviously one is the valuation of closing stock. Okay, this is one item. Related to valuation of closing stock, you have losses. That is the second item. Normal loss, abnormal loss, will come to that. Then commission, you may have del credere commission or normal commission, and when there is a del credere commission, what will happen to bad debt and all that we have to see. So this becomes critical. Then sometimes this goods sent to consignment are on invoice price basis. That becomes a complexity sometimes, because of which we'll have stock loading and reversal of stock loading, and we'll have a stock reserve as well. That also becomes an issue sometimes, or the trick part what they try to test. And sometimes what they do is in closing stock itself, they will say, prices have reduced. So how do we value that? And when we value closing stock, we have to understand what is to be done for expenses. Okay. If you understand these 4 or 5 tricky parts, you will be able to solve any kind of problem related to consignment accounts in the examination or from the books as well. Okay. Anybody else feels that there is something else apart from this in the consignment chapter?
No, sir.
Anybody has anything else to add on to this list? Because this is, I think, if you are mastered this, you'll be able to solve a consignment problem in the examination.
Sir, loading, reversing of profit booked.
Sorry?
Reversing of profit booked.
I'm not able. If you can just type it, it will be easy for us.
Sir,
If you can type, it will be easy for us to understand.
the goods damaged on transit or damaged goods.
Yeah, damaged goods. Okay, so that again will be, will be part of closing stock. And here I told, in this part where I told there will be a normal loss or abnormal loss, we'll cover in that as well. Okay, now, so let us get on to the, aspects one by one. Vivo 1806, please mute yourself. Okay, now coming to closing stock. Now here, a lot of us have a doubt as to what expense to include, what expenses not to include, why it is included, why it is not included. The simple principle is all expenses incurred till the goods reach consignee are included. So there could be, things like freight, insurance, transit fees, octroi. Okay, some cases they have tested even, customs duty as well. Then you may have loading. Then you may have unloading. Okay. Now, this may be paid by the consignor or these may be paid by the consignee. Whoever pays it, all of these are included while valuing the closing stock. That is the first thing. What is that? All these expenses which are incurred till the goods reach the consignee are included. Okay. Now, sometimes the question does not tell whether these are expenses incurred for taking those goods from the consignor to the consignee. They will not do the classification. They simply say that there are some non-recurring expenses. Now, when there are some non-recurring expenses, which are generally one-time expenses, these are assumed to be incurred for inventory. For example, loading charges, unloading charges, clearing charges, transport charges, insurance, freight, all of that are considered to be a part of your inventory cost, whether again incurred by the consignor or incurred by the consignee. Now, let me ask you a few questions. Go down rent. Will it be a part of your inventory or not?
No, sir.
Go down rent, will it be a part of the inventory cost or not?
No, sir.
No, this will not be a part of your inventory cost. Okay, then insurance after the goods have reached the consignee, will it be a part of inventory?
No, sir.
Okay, I'm getting responses here. No, right? So things which are incurred after the goods have reached the consignee will not form part of the cost of inventory. What you have to bother is what are the costs which are incurred all of those expenses are part of the closing stock. That is how we will value the closing stock. Okay. Right now, while valuing the closing stock, there is this case of normal loss and abnormal loss. And how do we deal with the normal loss and abnormal loss in the books of accounts or in the consignment account? So let me open an Excel sheet so that I can show you some computations. I'm not sure whether I've taken the this example earlier, but say you buy wheat and you grind the wheat. When you grind the wheat, you get wheat flour, whatever, however. Okay. So assume for a moment that you take wheat 10 kgs. Okay. Rate 35. Amount is 10 multiplied by 35, 350. Grinding charges for 10 kgs is say 10 rupees, which comes to 100. Your total cost that you'll incur is 450 for 10 kgs of wheat. Now, normally this grinding is a process where you get 10 kgs, you give 10 kgs of wheat to the flour mill. You will not get back 10 kgs of wheat flour. Why? Anyone has any thoughts?
So there will be some level of wastage.
There will be what kind? So there will be some level of wastage. Some flow, some there may be some spillage. Something might
Like
go up in the
sticking to
air.
the machine.
Okay, or sometimes we have this doubt always, right? The flour mill owner, he will keep aside some quantity with him. He will not give back entire 10 kgs. Something will be left over in the machine. So normally, when I say, for example, when I give 10 kgs of wheat, for grinding, I believe that I'll get back only say 9.5 kgs. Or to make our example simple, I'll make it 100 kgs. When I give 100 kgs, my expected output is only 95 kgs. My expected output is 95 kgs. So when I give 100 kgs of wheat for grinding, I know I will get only 95 kgs and I'm prepared. I know as a process, there will be a normal loss of 100 minus 95, which is 5. So I have made up my mind. I know that my loss will be 5%. Whatever I do, my loss will be 5%, and this I cannot avoid. Now, this happens in almost all the industries. There are scrap generated when you manufacture tubes, when you manufacture wires, when you transport petroleum products, there is some evaporation, there is some spillage. When there is a milk transportation, there is a spillage involved. Okay, there may be theft on the way. It could be anything. So something which is expected to happen, or something where the process itself involves that there will be some kind of loss which we are aware of, and which is a normal as a part of the industry process or business practices, that is called as normal loss. So what I do is, when I save or when I calculate the per kg cost of my flour, what I'll do is I'll say 4,500 divided by 95, that is 47.36. I will not say my cost is 45. I would have said my cost is 45 if I got 100 kgs back, but I got only 95 kgs. So what I say is my cost per kg of the flour is 47.36. Okay. 47.37, right? This is what is this is what is meant by the normal loss. See, actually what has happened, there is a normal loss of 5. That normal loss of 5 kgs is automatically included because we have increased this rate. So normal loss is included as a part of your cost of inventory. Okay, are we clear with this concept of normal loss?
Yes, sir.
So because you anyways increase the cost by considering the normal loss, you include the normal loss as a part of your inventory. That's the first thing. Now imagine for a moment that just a second. Imagine for a moment that due to some problem, maybe the wheat was bad or maybe the machine got damaged in between. So you got an actual output of 80 kgs only. You expected 85, 95, you got 80. So here abnormal loss is how much? 95 minus 80, that is 95 minus 80, that is 15 kgs. This is considered as abnormal loss. Now, how we value is all of this will be valued using the rate that you have arrived at after considering the normal loss. So when you just a second, I'll be back. Just give me a moment. Yeah. So just to repeat, we gave 100 kgs for the processing or for grinding, out of which we anyways expected 95, which would have been 47.37 per kg. So if you do 95 multiplied by 47.37, you get 4,500. 5 rupees is the normal loss. Okay, you consider the normal loss as a part of your cost of inventory. Then due to some other reasons, actual output is only 80. So the difference between the expected output and the actual output is considered to be abnormal loss. Okay. Now, when you value abnormal loss, you value abnormal loss using the same rate that you have determined here. So 47.37, 47.37. So your value of inventory will be 3789 and your value of abnormal loss will be 47.37. Okay. Now, one thing that we need to understand is when we are preparing a trading account or consignment account, here you will say goods sent on consignment, let us say 100. Okay. Then there is an abnormal loss of 15. Now that abnormal loss of 15 in this example, our abnormal loss of 15, that will unnecessarily distort the consignment account. So what we do is we exclude the abnormal loss of 15. So we give a credit of 15 to the consignment account. This will be later on transferred to the P&L account. P&L account after insurance claim. Say for example, 15 is the total loss. Insurance company paid us, insurance claim for 10 units for whatever reasons. Okay. So we credit entire 15 here. And in the P&L, we will say 15 minus 10, net debit is 5. This is one way. The other way is here itself you do a breakup where you say 10 is receivable from insurance company and 5 is abnormal loss. Okay. But net thing that you have to remember is this entire 15 has to be taken or transferred to the P&L. To the credit of consignment account. Okay. And if there is an insurance procedure or insurance claim, that effect can be given separately. Now, a lot of students get confused. How much is to be taken to the credit of consignment account? The simple way to remember is entire abnormal loss will be credited to consignment account. Now, whether you split as insurance claim and abnormal loss, or you write a single line item called abnormal loss, both of them are fine. You can follow either of the approach. Are we clear? And any doubt here?
No, sir. Clear, sir.
Everybody with me?
Okay, sir, clear.
Sorry?
Yes, sir.
Mukesh, any doubt?
No, sir, clear.
Okay. Now, it's 5% battery. Okay. Now, how do we extend? See, I gave you a wheat example where I said I'll give wheat for grinding, and then based on that there are normal loss and abnormal loss. Assume for a moment it is not wheat, but there is let us say we are transporting, say for example something like coal, or maybe some other products, anything. So there is an expectation from the part of the consignor that in this transport process or in the storage process or whatever they do, there will be loss of, let us say, 2%, 5%, whatever it is. This will be given to you in the question. This will be given to you in the question that, okay, so much of loss is to be considered as normal loss. Any loss over and above this normal loss will be considered as abnormal loss. Right? So that is one thing you have to be clear. Now the question is, how should we approach, when there is a normal loss, abnormal loss, expenses and all of that, how do we value that? So what you have to do is, you have to take inventory value. Okay. Now this inventory value can be at cost or at invoice price depending on the question. To this, add consignor expenses, add consignee expenses, whichever are non-recurring or whichever are incurred till the time the goods reach the warehouse of the consignee, right? You get total value, right? Then number of units to be considered are units sent minus normal loss. So you calculate this number, units sent minus normal loss, and divide this total value by units sent minus normal loss. You will get per unit cost. Now, based on this per unit cost, calculate closing stock and abnormal loss. Okay, this is the broad structure in which you have to follow. Only when we do a question, I'll be able to better explain to you how should we handle or how should we tackle these kind of questions in the examination. Any questions so far?
No, sir.
Those of you who said, normal loss, abnormal loss is a concern for us in the consignment accounting, did you have some better clarity after, the last half an hour of discussion?
Yes, sir.
Yes, yes, sir. Yes, sir. Okay, thank you. You can unmute and speak. No, I'll also feel good. No, otherwise it will be you single person monologue or TV. No, TV. Somebody is just speaking out. You just watch the news channel, something like that. I also get bored. No, if you respond back, I'll also feel like okay, somebody's there other side who is listening. Anyways, okay. So we brought. I'm not saying we have covered fully. We have broadly covered these two aspects, 1 and 2. Right? Commission will come to it, and then the goods sent and consignment part. Now coming to commission. Before we come to commission, please tell me bad debt of rupees 1,000. Where will you show this in the consignment account? Assuming there is a normal commission.
Debit side.
Sorry?
Debit side.
Debit side. So in the consignment account, you will say to what?
Bad debts.
Hey, to bad debts.
To
When you
consignee.
record sales, what is the entry you pass?
So by consignee.
By consignee. Let us say 10,000. Okay. Now, when there is a bad debt, will you say two bad debts or two consignee?
To consignees.
Why two consignee?
So because that amount from him we wouldn't be receiving.
So consignee sold 10,000 worth of goods. Consignee collected only 9,000. So consignee will pay us only 9,000. Consignee will not pay this 1,000. So we'll say to consignee 1,000. Here, obviously, in the brackets, we'll write bad debts. That is definitely there. But we'll say to consignee and not to bad debts. Are we clear?
Yes, sir.
Okay. Now, there is a concept called del credere commission. Now, normally the consignee is acting as an agent of the principal or the consignor. Okay. And whatever are the losses, bad debt losses, customers not paying, that is the headache of the consignor and not of the consignee. So, what happens is consignee may sell at his own will. He may sell to customers who do not have great credit profile and all of that. So to protect himself, that is the consignor, what the consignor would say is, I will pay you an additional commission, that is the del credere commission. Okay, and whatever is the bad debt risk has to be borne by the consignee. So there is a consignor and there is a consignee. Consignor says, boss, I will give you del credere commission. I will give you del credere commission. And after that commission, whatever is the bad debt loss will be your headache. It will not be my headache. Okay. You sell 10,000 worth of goods. You have to pay me 10,000. Bad debts, no bad debts is all your headache. Now, in that case, if there is a bad debt of 1,000, what will be the accounting entry in the books?
No entry.
Can you be louder?
No entry, sir.
No entry, because now this bad debt loss of 1,000 will be borne by the consignee and not by the consignor. So the consignor is not interested to pass any of this entry in the book because the consignor has already paid an additional commission called del credere commission. Are we clear so far?
Yes, sir.
Okay, then normally I'll just give a very simple scenario to explain to you the concept of invoice price and the related adjustments. Okay, first we'll take a simple one without invoice price, then we'll take one with invoice price so that we can relate whatever it is. So I think Excel would be better for this. So let me just plug this off. Okay. Now, say for a moment, goods sent on consignment is 10,000 and this is at cost. Okay. Goods sent on consignment is at 10,000. Goods are sold at gross profit, or I'll not complex it. I'll say sales only. 8% at, let us say, 12,000. 80% goods sold at 12,000. Then balance 20% is in inventory. And will not have any commission, bad debt, all of that adjustment will not have. We'll just have these, two items, and we'll prepare a consignment account. Then we will see what will be the impact when there is an invoice price, or there is a loading involved. Then what will be the impact? So we have a clear clarity of why the adjustments of loading, etc., has to be done. Okay. So you have consignment. Goods sent on consignment. So you will say to goods sent on consignment, 10,000. Okay. For sales, what will be the entry?
By consignee.
By consignee, how much?
12,000.
12,000. Okay. Then by closing stock or stock with consignee, how much is the closing stock?
2,000 at invoice.
Sorry,
Closing.
closing stock.
2,000.
2,000.
2,000.
So it's a simple question. Yeah, I don't ask tough questions every time. Sometimes it'll be institute also. Sometimes they'll ask simple question, and students will be thinking, how can the answer be so simple? 8 marks question, they gave such a simple question. Sometimes it happens. Okay. So closing stock 2,000. To profit on consignment. 12,000 plus 2,000 minus 10,000. Sir, what about commission? I'm assuming commission is not a charge or not payable because this example is for you to understand the impact of loading on goods. Okay. Now a lot of times what the consignors want or don't want actually is to tell the consignee the profit that they are earning. See, if the consignee gets to know, or out of 12,000 there is a profit of 4,000. Out of sales of 12,000, there is a profit of 4,000. Then the consignee will do 2-3 businesses with consignor. Then say, I don't want any consignment business. I'll start selling on my own. So for this, what the consignor can do is, instead of saying that they're sending goods costing 10,000, they can send the goods at a higher value. They can send the goods at a higher value. Say for example, in this case, the invoice price basis, or they have a separate pricing, and they say we will send at 20% over cost. They're sending at 20% above cost. So how much will be the value for goods sent on consignment?
12,000.
12,000. Okay. Then will sales value change? If they are selling at this number itself, sales value will not change. So this will be 12,000 itself, right? Then closing stock, because we have sent at 12,000 of pricing, we will do the valuation of closing stock at 12,000 basis only. What will be the value of closing stock?
2,400.
Sorry, 2,400. Basically 20% of 12,000, 2,400. If I do all of this, then my profit will be 2,400, which is not the correct picture. Okay. Why it is not the correct picture? Because I have debited the consignment account with a higher amount. So what we need to do is to nullify the impact. We have a contra entry or a counter entry which says by goods sent on consignment. This is for loading. How much is the loading? 2,000 is the loading. So you credit it to the consignment account. Similarly, the closing stock has a loading. How much of loading does the closing stock have? Loading the closing stock have
480.
480. How 480?
400.
480.
How for see closing stock cost? See, what is the cost? 10,000. Out of that, 20% is not sold. That is 2,000. On that 2,400 is the loading. That's how we got 2,400. So to stock reserve 400. Oh, not here. Sorry, 400. So your profit on consignment will be 12,000 plus 2,000 plus 2,400 minus 12,000 minus 400, which is 4,000. Okay, this is the logic why we have this contra entry for loading reversal and a contra entry for stock reserve. Okay, and this is just to have a fair presentation or fair understanding of what would have been the actual profit when we send goods at an invoice price and not at the cost price. Any doubt so far?
No, sir.
No, sir.
Are you guys know
No,
everything?
sir.
Or is it that my revision is making you understand things faster?
We'll go
Yes,
with the
sir.
later, sir.
Sorry?
So the later set, sir.
Later? No. I think you guys have put enough first. See, my role today or in the revision session has been just to refresh your memories. Okay, it is not that you do not know the concepts, or it is not that you have not learned. Just to refresh the memory, and this will give you some amount of confidence booster before you reach the examination. Okay, that is the whole intention of the session that we are conducting, right? So this is the broad thing that we will cover as a part of consignment accounting. Okay, now in the next class, because if I take up a problem, it will again take a lot of time. If you have any questions related to whatever we have discussed today in the last 45 minutes or last 55 minutes, actually, you can let me know. Otherwise, in the next class, I'll take up 2 to 3 problems, tricky, where there is invoice pricing, and then when there are consignee expenses, there are losses. Okay, and we'll also take up at least 1 or 2 past exam papers. We'll just have a look at them, and we will see whether we are able to handle those questions in the examination. In the meanwhile, if you have any specific question on consignment for me to solve in this live revision, feel free to send the question to support@indigolearn.com, or you can put it out in the forum, or if you're a part of the WhatsApp group, you can send it to the WhatsApp group as well. And I'll take up the question from there and I'll solve it in the next class when we meet on Friday. Okay.
Okay, sir.
Yeah, class I start at 4. Sugam, thanks for responding. So the next class will be on Friday. Okay. Then MTP 2022 series, how to value closing inventory. So I'll just make a note of this so that we'll take it up in the next class. Then sir, I'm new to CA foundation. See, nothing is easy or tough. Okay. Everything is tough if we are under prepared. Everything looks easy if we are enough prepared, right? So it depends on that. I have a lot of friends who have taken, who are from the science stream and who have cracked the CA exams in the first attempt. Practical question 2. So I already have 2 questions to solve. If somebody else has something else to be added, please let me know. Sir, marathon kab se hoga? So we don't do marathons as such. Okay. Each faculty or each teacher has their own way of teaching. Marathon means my throat will go off. We can actually combine all the marathons and all the revisions and tell that this is a marathon. Okay. WhatsApp group addition is by invite only for specific paid students who have completed certain portion of syllabus. Only then it is accessible to them, not to all. Chalo, anyways, you can make use of our app, our forums, and YouTube channels. So, not taking much time now. We'll see you guys on Friday at 4 o'clock with at least 2 to 3 tricky questions on consignment. Chalo, bye and take care.